Hello and good afternoon, traders. I hope everybody's doing well. This market is kind of unbelievable. I don't know if you were paying attention to the E-mini this morning, but it locked in the pre-market. I was toying with the idea of playing that a bit in my simulation account, and there was absolutely no trading happening. And then, of course, it locked limit down again shortly after the open, which has not happened in quite a few years. I think they said there was a flash crash the evening of the last presidential election, and then before that in 2008, 2009, sometime during or just as that recession was kicking into high gear. So super interesting stuff to watch. I hope everybody is making sure to use risk management strategies if you are live trading. This is a really difficult time to remain profitable. And I think I mentioned before, working in a trading combine right now. So risk management is high priority for me. And I just can't emphasize enough for you how important it is that you cut your losses and save your money so that you can trade tomorrow. Quick reminder, take a look at that disclaimer on my channel. Trading futures and equities, any kind of financial instruments, carry with it a substantial amount of risk. You could lose more money than you have in your account. You could end up owing your brokerage your house. So make sure that you are exercising excellent risk management and discipline in your trading. And if you aren't able to do that, trade in a simulator. It's better to work your strategy out there than it is to hop into a live account if you're just not emotionally ready to do so. Okay, so I just wanted to pop on really quick and do a little video review of natural gas. If you take a look at my little ovals here on the chart, I drew those out this morning based on the TPO study. And I have really come to appreciate this study over the last several weeks. And it doesn't always move through your low order flow nodes in the same day that you're marking out your excuse me, my brain is still really distracted this week. It doesn't necessarily move into that zone the day that you identify that as a possible area of price movement, but quite frequently it does within a couple of days. So we've got our chart set here on the 30-minute, I think it's 5-day, 30-minute chart. And the reason that I've selected that is that from my understanding, the TPO study is designed to function off of the 30-minute time frame. So I've actually had a bit more success using the TPO profile since I started doing my analysis on that 30-minute chart. So we came down here in the pre-market to 1.61, and I'm pretty sure that that is actually the 5-year low. We can take a look in a few minutes. For some reason, I was thinking it was sub 1.6, but the couple of times I've looked today, I haven't seen anything lower than that. So we don't really know what support is beyond this point, unless I'm incorrect about that price level, but we'll take a look there in a few minutes. So I've drawn out a new demand zone here, and don't buy anything. The reason that I've drawn out this demand zone is because this is where the price action, we had this huge gap down, price action consolidated here for a little bit in the pre-market, bounced here in this this newly identified zone, and then came back, retouched with a nice long wick, and then it headed up continuously for the entire day. In my simulator, I did take a position in here for a scalp, and then I took another scalp or two somewhere up during this price action. I usually, in retrospect, kind of wish that I had just held from one zone to the other, because as we can see, the low order fill nodes were all visited during the day, and that would have been a really nice run. But I did end profitably, so I'm okay with that. All right, so I'm just going to relocate these. Since they haven't really changed substantially. And then I'll take a look at them. I'm not sure that I'll trade in the post market today, but we'll see. We'll see what's shaken once things reopen again after settlement. And if you haven't watched my other videos or anyone else's videos on the TPO, please do take a minute to do so. It's incredibly helpful. And if you haven't liked my videos or subscribed to my channel yet, that would be fantastic. I'd appreciate it. But so as you can see, these represent orders that have been filled, the areas that are blue and filled in. So what we're looking at here on these spots where you don't have blue printed out to the same distance as the other is that those are low order flow nodes. And price tends to gravitate towards those areas. And as you can see, they ran right through all of it this morning. Let's go ahead and back out here to the max available chart on natural gas. So as you can see here, the last time price was at this level was in 1999. 2016 was the last time it was near here. It's not showing me the exact low, but, well, I guess it did get to 1.608, so we didn't hit that low quite yet. So I guess keep your eyes open for another possible move to the downside. It's just really tough to tell. Yeah, this is marked out as the new low, so let's see. Well, so I am looking for the price to potentially bounce up here and fill this top section on the TPO and revisit this 1.847. There's no guarantee that it's actually going to do that, but I am not comfortable taking another short position until I see what the price action is going to look like around that area. I would really like to take it short before it takes another dip and maybe hold that overnight with a trailing stop loss. So this is the 180-day chart. We're starting to see some interesting moves down here where it hadn't trended out of this channel for quite some time. It now looks to be moving sideways just a bit more. So we could see it slam down into the sub 1.5, 1.4 area, revisit the bottom of this channel, but it hasn't touched the bottom of this channel since mid-January. So it could be winding up here for a move to the upside. There's just no way for us to tell until it happens. Sorry about that. And for those of you who appreciate candlestick patterns, got a little head and shoulders that formed here before we took this dip down, and now we've got a bit of a double bottom formed here on what is now the low of the last 5 years. So I think that there's definitely potential for a move to the upside. This oval I haven't moved over quite yet, but as you can see, this is where price rebounded up to a couple of weeks back. I caught a nice little short trade on that move, so I will be watching for price action to move into this area again for a possible retouch of that node. And I just really don't have any idea what's going to happen with the price movement after that. I know there's been a lot of talk of the industry having some financial issues, and because the prices have been so low for a significant amount of time, they're starting to cut back on supply or just burning off the natural gas that's a natural byproduct of other commodity productions. So there's potential for the prices to start going higher if supply and demand starts to play out differently than it is right now. So we will just wait and see. So this, oh, that is the wrong chart still. Okay, so here's the 5-day, 5-minute chart. Like I said, this is the one that I like to trade off most frequently. This little arrow here, if you're not familiar with it, that is an engulfing candle. I don't really put a lot of weight onto engulfing candles. You can see here we had an engulfing candle, which just means that this candle's body was completely engulfed the candle before it. But you really have to pay attention to price action and not just rely on a single study, because as you can see, we had a bearish engulfing candle followed by a substantial move to the upside. But it will be interesting to see how this opens up. There's a lot of potential support below it, so we will just have to wait and see, I guess. Let's really quickly just pop over and look at CL. I'm not going to do a very long analysis on this, but as many of you know, back in October, I started researching really long charts on oil. And I had identified this zone down here as a possible area for price action to move during the election year. I observed that every presidential election year, we have a substantial move to the downside, and that tracks back. I think that I did that on a 20-year chart. I didn't do the full 30-year chart. Now this chart here goes back to 1994. And if you are so inclined, you can go through and take a look at every single dip that's associated with an election cycle. This run up here was post 9/11, which makes a lot of sense. And then, of course, we have the financial crisis. So I don't know. I'm not sure what the next move is going to be. I don't think anybody really has any clear idea. I would like to point out, though, that this will be the third touch down into this zone. And maybe you couldn't, I don't know. It didn't really reach this zone completely on that very first recovery. So we can either consider this to be a double bottom starting to form, or this could be the third tap into this zone, which could lead to significantly more moves to the downside. It's really anybody's guess at this point. As you can see, in the past, we have had oil all the way down at $10 a barrel, and it's really not that long ago. 1998, 20 years, 22 years. That's really it's really not a significant amount of time in the grander scheme of things. So this will be an interesting game to keep our eyes on. Let's peek at. So just for grins and giggles, I did go ahead and take an ETF position today in USO. That's one that I've played a few times. It's not a very big position, but based on the RSI and the price action down in this zone, having previously been identified as a value area, if we do see price action drop down below 24, I will get out of that swing trade. But I see the potential for upside on a long-term swing to be worth the risk on that trade. So we'll see how that pans out. And one really quick look at the same time frame. This one runs back to 1994 as well, and this is the S&P 500. So I know that this feels like a really significant drop, and I mentioned on my last video that I took a pretty big hit on a futures trade in the E-mini that was really just irresponsible on my part. But overall, the American economy and the world economy have been trending up for a really long time. Oh, I completely forgot that you could scroll this over. So this is all the way back to 1984. And in 1984, the E-mini price here is 141.5. And look at where we are today. So if you're able to hang on to positions, say in long-term retirement accounts, talk to your financial advisor before you make any drastic decisions, depending on what your age is. It's not always the best idea to sell. Now, my position, I had to sell my futures position because I don't have enough margin in my account to cover the bad trade that I took. So I highly recommend people, again, to maybe trade minis if you have smaller, or micros if you have a smaller account size. But always, always, always keep your stop in the market. I opted to take a position when the E-mini was touching the bottom of a channel that I had previously drawn here. It has just been continuously uptrending for such a long time. I thought that it would probably pop back up to the top again, but I was in full acknowledgement of the fact that it could dip down. I figured that we would probably see a substantial wick to the downside, which is why I opted to not put a stop in the market for that trade. Because as you can see, sometimes we get really substantial wicks, and I did not want to see a giant wick to the downside followed by a really big up move that was going to cost me a couple of $1,000s. And instead, I ended up in the middle of this mess. So please learn from those of us who have made that mistake, and put your stop in the market. One of the trade instructors that I've been following quite a bit lately, he says that you need to identify the risk before you enter your trade, and we all know that. But one thing that he repeats over and over again is that you are not putting the stop in the market to protect yourself from the market. You're putting the stop in the market to protect you from yourself. Because you just have no idea what could happen. This is just an unbelievable move to the downside, and no one was anticipating that it was going to happen so quickly. So save your money so that you can trade tomorrow. As you can see, it has just continued trending further and further down. So we'll see what happens. We had a big gap down on the open yesterday. Trading was basically halted for a big chunk of the day. Then market opened this morning, another big gap down. We're seeing some movement around this this demand zone, and it'll be interesting to see where things open back up later on this evening in the post-market session. So I am going to go ahead and hop off. I hope everybody takes the time to do your own technical analysis. Remember, never trade based on anybody else's opinion of the market. You need to figure out what works best for you and stick with that plan, and always exercise good money management, good risk management. I will try to hop back on later on in the week. I've got quite a lot going on, so it may be just for a short video. This one was longer than I intended it to be. Sorry you've heard me droning on for such a long time now. Anyway, I hope that you got something out of this video. And if you would please do so, share and like and subscribe, and happy trading. Bye.